the reason the big problems of society are big problems is that they're damn tough to solve. When I buy businesses, I'm buying easy businesses. But the reason the big problems of society are big problems is that they're damn tough to solve. So they're swinging at bad pitches. I'm swinging at easy pitches in business, but they have to swing at bad pitches. But I tell them I want them to try and do it. And if they fail, it doesn't bother me at all. I tell them if they give $1 million here and $1 million there and $1 million there, they're not going to sleep because I'm going to be haunting them. I'm going to come back every night. I do not want the eyedropper approach used to philanthropy. But I want them to use their judgment to look at important problems that do not have a natural funding constituency. If the government's going to fund it, fine. They should be funding important problems, but we won't need to do it. The role of private philanthropy, in my opinion, is to fund things that don't have the natural constituency, and that's what Bill's doing. There aren't a bunch of people around that you can make an emotional appeal to make vaccines available to millions and millions of kids around the world. It doesn't tug at anybody's heartstrings. You can't name buildings after them. It just isn't the sort of thing that you can raise money for on an emotional basis. And there's nothing wrong with raising money on an emotional basis. But that is a problem that won't get solved by a funding constituent that's responding to that. But Bill is responding to what in his mind is the important thing, which is saving lives, and he doesn't care whether he gets his name on a building or whether anything happens or whether anybody knows about it. He gets publicity just because of the scale he's on, but he doesn't care about that. I can promise you that. So that's my philosophy, is that I got this money not because I'm a superior human being, not because I've done more for society than other people. I was wired the right way to be dropped into the United States at this particular time. It's a huge capitalistic society, and I'm wired, no credit to me, but I just born that way, so that I'm better at asset allocation than other people to some degree. Just like other people are better at all kinds of other things. And I was with two teachers out at Sun Valley that are doing more for society than I am, and this market system does nothing for them. Market system does all kinds of things for me. Gates says if I'd been born 5,000 years ago, I'd have been some animal's lunch, because I can't run very fast, can't climb trees. And I could tell that animal was chasing me, wait till we see how I could allocate assets, But it wouldn't have made any difference. So here I am, I'm born now, just very, very lucky. And the odds when I was born in 1930, the odds were 50 to 1 against me being born in the United States. That's a terrible set of odds to face. And yet I was dropped down here, And if I'd been dropped down in Peru or someplace or China, I wouldn't have had a chance. So society is what does it for you. And it should go back, in my view, it should go back to society. If you've been lucky enough to be dropped into a society where your particular wiring pays off big, that's just luck. And there's nothing wrong with being lucky. I don't feel guilty about it or anything else, but I also don't feel that. I feel I have a lot of fun doing what I do, but I feel the money should go back into society, and it should go back as intelligently as it can. And the best way to do it intelligently is to have high-grade and intelligent people administering it at the time. And you don't know the problems that are going to be out there 10 years from now or 20 years from now or 30 years from now. But I do know if I've got a small number of high-grade, smart people, and high-grade is more important. If you gave me 20 extra points of IQ, but cheated a little on the high grade, I wouldn't take it, because they got to be. There's so many chances to do things in a petty way, or to try to. People get subverted in their own minds to their own interests rather than the interests of the institution. So I really want super high-grade people doing it, and I've got them. And I think the money might do a lot of good, it may do no good, but it'll be operating in fields where if it does some good, that good probably wouldn't have been done otherwise. GDP per capita in the 20th century in the United States went up 610%. Actually, qualitatively, it went up far more than that, because you can't really measure certain things in medicine or whatever it may be, and improvements. But just on a quantitative basis, it went up every single decade, including the decade of the 30s. So here you had 100 years when basically the U.S. citizenry was improving their lot decade by decade by decade. The 30s, it was up 13%. Best decade was World War II. The 40s was up 36%. The worst decade was the First World War. So you get sometimes the analogy, you can get in trouble on analogies. But in any event, it was a huge period. Interestingly enough, there were 6 big periods in there for the stock market in both directions. There were 3 big bull markets. From 1900 to 1921, the Dow went from 66 to 71, less than a 10% move in 20 years, less than 0.5% a year. You got dividends too, but 0.5%. So it didn't move. From 21 to 29, as you point out, it went from 71 to a high of 381 in September of 1929. Went up 500%. Well, obviously, the well-being of the country didn't go up 500% during that period, and the well-being of the country went up a whole lot more than 10% during that first 21 years. So you got this very uneven development. Then from September of 1929 until the end of 1948, the Dow went from 381 to about 180. It was cut in half. And that was 18 long years. And yet the per capita GDP was moving right up during this whole period. So the economy was doing fine. From 48 to 65, the Dow went again from about 180 up to close to 1,000. Again, 5 for 1, which was far outstripping it. From 65 to 81, the Dow went down, literally. Well, again, per capita GDP. And then we've had this last period where it's gone up terrifically. If you take the whole 100 years, it went up 180 for 1. Every $1,000 became 180,000. But 43 and 3/4 years were those 3 big, huge bull markets, and 56 and 1/4 years were periods of stagnation, all in an economy that was doing fine. But you had these huge changes, big gains a few times, long periods of stagnation. 20 years, I mean, that's a long time to do nothing. The answer is that investors behave in very human ways, which is they get very excited during bull markets and they look in the rearview mirror and they say, I made money last year, I'm going to make more money this year, so this time I'll borrow, or the neighbor says, I wasn't in last year when that neighbor was dumber than I made a lot of money, so I'm going to go in this year. So they're always looking in the rearview mirror. And when they look in the rearview mirror and they see a lot of money having been made in the last few years, they plow in and they just push and push and push on prices. And when they look in the rearview mirror and they see no money having been made, they just say this is a lousy place to be. So they don't care what's going on in the underlying business. And it's astounding, but that makes for huge opportunity, just huge opportunity. In 1970, put 100 and some percent of their new money in stock because they were wild about stocks. Then they got a lot cheaper and they put a record low in, 9% of their net new money in 1978 when stocks were way cheaper. People behave very peculiarly in terms of the reactions because they're human beings and they get excited when others get excited, they get greedy when others get greedy, they get fearful when others get fearful, and they'll continue to do so. And you will see things you won't believe in your lifetime and securities markets. And the country will do very well over time, but you will see these huge waves. And if you can stay objective throughout that, if you can detach yourself temperamentally from the crowd,